Dividend stocks remain a favorite for Canadians and like 90% of my subscribers. I'm constantly looking for different Canadian stocks and ETFs to recommend. This video will quickly break down 4 of my favorite stocks. You've probably heard me break these down in the past. There's nothing new here. These won't come as a surprise or a shock to any current dividend investors, but here goes. Also, please subscribe to my channel. I'm still only at 25% views from subs. 75% of my views come from unsubbed viewers. So it does help. So maybe I'm doing something wrong, but I feel like if I keep asking people to sub, maybe they will. First up is Granite REIT, ticker symbol GRT.UN on the Toronto Stock Exchange. It says .UN to indicate it's a unit in a trust instead of a share in a company. Since I work as an accountant in the REIT industry, I may or may not know a lot of people in this company, but that's besides the point. They pay a monthly distribution and the annual yield is currently 3.21%. If you invest $10,000, you'll get $321 annually or $26.75 per month. That doesn't sound too impressive until you look at the capital appreciation over the last 5 years. They're up 117% plus dividends. If you want to know how impressive that is, the S&P 500, which represents the largest 500 companies in the US, only went up 92% plus dividends. So if you want a better comparison, we have to look at other Canadian REITs. Choice is up 4% in the last 5 years. Smart REIT is down 4% in the last 5 years. Granite focuses on buying, developing, and managing industrial, warehouse, and logistics properties in North America and Europe. If we look at their top 10 tenants, the top one is Magna, which is owned by the founder of Granite, so there's a little bias there, but there's also Amazon and Restoration Hardware. To be honest, I don't recognize much of the other top tenants, but they only make up a small amount of revenue, making this, in my opinion, a solid hold for any dividend-focused investor. Next up, Fortis. I've probably reviewed this energy stock twice before on this channel where I did an in-depth review of their financials, but this will only be a brief reminder, no detailed analysis. Fortis, ticker symbol FTS on the TSX and the New York Stock Exchange, so be careful which one you buy if you don't have US dollars. It's currently trading at $59.80 per share. They pay a quarterly dividend with an annual yield of 3.58%. So if you invest $10,000, you'll earn $358 per year or $89.50 every 3 months. They've been consistently paying and increasing their dividends for 48 years. So not just paying, but your payout is going up every year. I've mentioned this before, but it is definitely a contender for a buy and hold forever stock. Fortis is an electric utility company. They're considered a defensive stock, so it won't go down that much during a bear market or a recession. With this recent sell-off in 2022, the market is down 10%, whereas Fortis is only down 1%. Third on the list is BCE. Never recommended before on this channel. Bell Canada is currently trading at $66.44 on the TSX. It also trades on the New York Stock Exchange. They currently pay a quarterly dividend of 5.27%, which is pretty impressive considering it's a safe and stable company. If you invest $10,000, you'll earn $527 per year or $131.75 every 3 months. If we look at the past 5 years, it's not crazy impressive growth with just 15% increase, not including dividends. But what makes Bell Canada popular is that they've been increasing their dividends by an average of 6.8% over the last 10 years. So that means you're earning 5.27% now, but it might turn into 5.58 next year and 5.95 the year after. Despite the current market's volatility, Bell Canada still seems like a safe and stable bet. Like I mentioned earlier, the market is down 10% in the last 4 weeks, whereas Bell Canada is actually up 1%. This is actually a sign of a defensive stock that will maintain its value in a bear market, recession, or massive sell-off. Last on the list, I feel like a Canadian dividend video isn't complete without at least one bank recommendation, so here it is. For the second time on the channel, Bank of Nova Scotia, ticker symbol BNS on the TSX and the NYSE. They're currently trading at $90.33. They pay a quarterly dividend. The annual yield is 4.43%. So if you invest $10,000, you'll earn $443 a year or $110.75 every 3 months. Again, the reason why Canadian banks are so good is that they've increased their dividends 43 times out of the last 45 years. Unfortunately, they weren't able to increase 43 years in a row, but you won't hear me complaining. If we look at the last 5 years, they've only increased by 15%, but that's not including the dividend you'll be earning that whole time. But if we look at the last 4 weeks, they've only decreased by 0.5% compared to the market's 10% drop. That's a wrap for this video. Thanks for watching. Let me know if you have any questions. I haven't had time to film any videos because I'm busy with my full-time job. Hopefully my next video will be about dividend focused ETFs because those seem to be popular as well. I'm hoping maybe in the spring my time will free up. Maybe I can start releasing 3 videos again. I'm not sure what will happen because my real estate job picks up in the spring, so I might be busy then as well. I only have time to film videos on the weekends, but I'm going to do my best. Let me know if you have any questions. Let me know if you have any topics you want covered, or if anything was unclear in this video. Tune into the next one.